Congratulations! You made the Varsity, the podcast. My name is John Aranda, and I'm a sports correspondent and host of this pod. And today, Michael Nathanson returns to the Varsity. Michael is a co-founder and senior managing director of the equity research publisher MoffettNathanson, and for my money, he's one of the smartest minds on the business of media. But before we get started, I actually have some news. Michael's MoffettNathanson and Puck are partnering for a second straight year on a sports business conference that we're going to hold this fall in New York City. In the Arena, that's the name of the conference. It's going to be held October 1st in New York. And we're going to have a lineup with top executives like Bella Bajaria, who, of course, is the chief content officer from Netflix. Matt Strauss, chairman of NBC Universal Media Group, NCAA president Charlie Baker, they're all going to speak. We're going to have a lot more top business executives to announce in the coming days. So reach out to me if you're interested or go to puck.news for all the relevant info. But before we get to Michael Nathanson, today is Wednesday, July 29th, and here's what I'm watching. I'm sorry, I really am, but I'm fascinated by the Savannah Bananas. This is a touring baseball team, scripted entertainment, that has been part of my consciousness for about 4 years now. I was blown away last year when the Bananas came to Camden Yards in Baltimore and sold out 2 consecutive shows, 45,000 fans a night. The games focus on entertainment and tap into local baseball fandom. The Camden Yards games, they had former Orioles like Adam Jones, Matt Wieters, Nick Markakis. But it's a kind of shtick that I really thought would have run its course by now. But guess what? The Bananas were in Chicago over the weekend and sold out Wrigley Park for, count 'em, 3 consecutive nights. Incredible. Meanwhile, across town, the White Sox gave away Hawaiian shirts and played the Astros, and they still couldn't sell out their game on Saturday. Attendance was 30,000 in a 40,000 seat stadium. Again, just incredible. And per Paul Sullivan in the Chicago Tribune, Wrigley Field was filled with merchandising tents selling all sorts of banana paraphernalia. Baseball, dancing, karaoke, wrestling, comedy, magic. And as Sullivan wrote, everyone seemed to get their money's worth. Okay, now, let's get to Michael Nathanson. Michael, first of all, great to see you again. I hyped this in the intro, but I am so excited about doing another event with you. Our event, we did an event covering the sports industry last year where we got people like Josh Harris, Adam Silver, Eric Shanks, Michael Rubin, Jerry Cardinale to come speak. We decided to run it through again October 1st in New York. Really excited to be doing this with you again.
Yeah, John, we got some great people to tell us, like, okay, who do we get this year? Who can we announce we have already, John? You have 3 big headliners that you've got for us.
Well, Bella Bajaria from Netflix doesn't speak at a lot of events, but decided to come to speak with us. Same thing, Matt Strauss over at NBC Universal runs the whole thing over there, and he doesn't appear at a lot of events, so getting him to come on board was great. I'm particularly excited. Charlie Baker, the NCAA, is going to be there, so it's going to be a really good event. We're really excited to be partnering with you on it again.
Oh, we're psyched, John, and we have more people to announce in the coming weeks, I believe. It's October 1st in New York, and last year was a great first attempt. This year's going to be even better. So we're psyched. Puck and MoffettNathanson, it's going to be fun to do this. It really is. So absolutely. All you people out there listening, sign up and get tickets. Reach out to us. We'll get you tickets.
By the way, we have known each other now for about a quarter century. So the idea of actually working together on this stuff, you've come to my conferences, I've gone to your conferences. It's going to be a lot of fun. So let's go through a couple of the big topics that are certainly going to be sort of dominant themes at this conference that we're doing in October. Paramount. They put a pause on everything. It's looking like possibly 2027. As you look at what's happening with Paramount's acquisition of Warner Brothers Discovery, what's the likelihood that this goes through in your mind?
Okay. And for disclaimer, Robert Fishman now covers those names as part of, MoffettNathanson's build out. Robert's cover more media. My working assumption is the deal will close. Like, I know there's going to be a court case, but the reality is this is a court case about blockbuster films. And I can tell you that with a few exceptions, no one knows what a blockbuster is going to be until it's a blockbuster, right? So I can't believe that Paramount lawyers kind of didn't do a better job of defending the idea that there's not a antitrust issue here, but the antitrust issue is going to be about theatrical release, most notably blockbusters. I'm like, it's kind of, I just can't imagine that this is going to be held up. They will lose that case, right? But for the time being, we have a pause, right? We have a pause until the case is decided. It surprised me that that's where we are. Both stocks have fallen, but this is not Robert's view, but my view is this will get done. Paramount needs it to get done. They do. Paramount on its own doesn't have scale. And Warner's, I don't think, is prepared for a life as a public company again, right? They have their mindset like we're selling ourselves. So we have a court case. We'll see. We'll see what happens. But I think it's a very flimsy, argument that this is, an antitrust issue on theatrical releases. I guess Paramount's never, except with a couple exceptions to Tom Cruise movies, Paramount's not been a blockbuster business for a long, long time. They're not seen as a real credible global theatrical powerhouse way that Disney is and Universal are. And Warner's, so those three studios really are dynamite blockbuster companies. Paramount's not.
The Paramount came out and the pause is going into 2027. I saw instant reaction suggesting that maybe something is going to happen before then. What's your timetable on this?
It's going to be the court case, right? So it's going to be court case going to start, arguments. The question is, will the judge be able to get back to them by that date? Probably they will be, right? The fact that Paramount offered that as a suggestion, so they feel pretty confident that this court case will end sooner than probably that 2027 date, right? But it's all about the wheels of the legal process. How soon can they start? How long is the court case? And then you'll get an answer. Look, we've dealt with this. I covered internet stocks, so Google's been through this with antitrust with Apple. This is just what happens in this day and age, right? It's going to take some time, but I don't know exact timing because it's really about when the court case wraps up or when the judge issues an opinion.
For this to go through, Michael, is your sense of Paramount, it feels like they have the law on their side and they're just going to see it through, or are they going to have to give something up?
Well, they gave up in Europe, right? So in Europe, they had a JV with Universal called UIP. So they gave up this joint venture. They gave that up already. In America, there's not a joint venture. I'm not sure so we thought the issue was going to be about cable networks, John. Like we thought the combination of Warner's and Paramount's cable networks would be so large that they would have to divest cable networks. That wasn't the issue, but I would have bet that was an issue that they could have solved easily by just selling some networks. I don't know how you resolve this issue right now, because you can't really sell a studio. You could sell a label, but to really DC and then the occasional Warner blockbuster and occasional Paramount blockbuster, it's not an easy solve here. Like you can't sell a studio. That would be defeat the idea of what this deal is about, right? To me, what's going on here too is California will have a ton of job loss because of this, right? So if I'm the attorney general, if I'm a California politician, I don't want to see this merger happen. I just don't. If I'm a guild, I don't want to see any loss of all these jobs. Now, Paramount will say we're going to increase the output when we combine. I personally don't believe that. I think they will reduce their output, but that's what they're saying. I think people in LA don't believe they're going to increase their output when they combine studios. They're talking about making 30 movies a year. That seems impractical. But again, I think that we'll have the law on their side. I really do. I think they'll be able to prove why this, the theatrical, concentration is not that big of an issue. That's what my view is.
Yeah, I've seen that whole idea about the the cable networks, which of course with Paramount that's like VH1, VH1 Classic,
yeah, exactly.
and
MTV,
a bunch of cable networks. I would imagine that Paramount would be more than happy to divest that, right? That's certainly not a growing business for Paramount, right?
Totally. Theatrical is hard because you can't predict theatrical success, right, John? Like the idea of like it's a blockbuster market share. Blockbusters, yes, Chris Nolan delivers blockbusters. Marvel and Pixar, blockbusters. DC, well, some are blockbusters, some are not, right? So I think it's really hard in general to say there's a blockbuster market here that we want to define, and they have too much share of that market. It seems kind of crazy. It really does. You know, maybe
The
what they'll do is
the
they'll say,
other
look, third parties, they distribute. Warner's is a good third party distribution, platform. Maybe they'll say, Warner's, you can't distribute Formula One going forward. Like you can't be a distributor of third party movies.
the other aspect of this that I find interesting is there is we'll talk about the ESPN layoffs and NBC sort of spinning itself off. There
Yeah.
is in traditional media, all these networks they're gonna pay through the nose for the NFL, of course, and we saw them do it for the NBA, but they're
Yeah.
gonna have to cut costs in certain areas. And people looked at when Skydance took over Paramount, and the first thing they did was to spend $8 billion or $7 billion on the UFC. It was like, okay, here's
Yeah.
another big bidder coming. But once this goes through, they're going to have to pair a lot of those sports rights, and in terms of cutting costs and bringing over the Warner Brothers Discovery sports rights. They're going to have to make some really tough decisions on a couple of sports that are out there that they really do like.
Right, and the gating factor is going to be their debt, right, John? It's like what's different is you'll have all this leverage from combining the two companies. You have to manage through a higher inherent debt load, right? The companies that don't have that leverage, like the tech companies, Netflix, for example, they don't have to be as judicious about what things they sign. Like they have strong balance sheets, strong cash flow. Warner's and Paramount together are going to have to make some tough decisions. I totally believe that. I really do.
Yeah, and I think a lot of those decisions are like not to hype them out, but the French Open that Warner Brothers
Yeah.
Discovery loves, and the you can take a look, and they love the Masters, they love the NFL. They love the NCAA tournament, and beyond that, like you really have to prove that you can bring in advertising revenue, and that your things at cable and satellite operators are going to want to pay in order to keep your channels on board, basically.
Right. And college football too. Well, they're college. They
Oh,
had Big Ten, right? They had SEC. That was an awesome package. We'll see about Big Ten, John. I would think they want to be in the Big Ten business, but we'll see. You know.
I guess but I don't think they love the current Big Ten deal. I don't.
No, it's not a
NBC
great. I
doesn't love the
mean,
current Big
it's
Ten
not a
deal
great
either.
deal. I know. SEC was a great deal. That was a great deal what they had, and that's
That was a
long
great deal.
gone,
And
right?
and now if you end up with a third pick in the Big Ten, sometimes you're going to end up with like Maryland versus Rutgers. I mean, how many people are
Spoken like a Maryland
great
fan.
ratings in my
Yeah,
house for that game, Michael. But
exactly.
outside of that,
Yeah,
not
the
not a lot.
I-95 corridor from Newark down to Baltimore is going to be really hot and heavy. John, it's funny. When Zazoff lost the NBA, he and Luis went in and started buying rights to offset the impact of losing the NBA. But you would probably argue the things they bought, they could be thrown overboard. Like that buying spree really didn't give them that much clout. I know they love the French Open. Who doesn't love the French Open? But you probably will see them in some of those deals they did right after the NBA and right before the deal, right? They had like those things probably not necessary going forward.
Well,
If anything,
you've been through these reports, Michael. Like the losing the NBA, and all of a sudden, like this quarter, or not this quarter, the past quarter with the NBA Finals, their advertising business, it didn't crater, but it was down pretty significantly, and it was all
yeah,
due to
you'll
the
see the
fact
second
of
losing NBA. But I'll cut you off because I'm saying you'll see the second quarter where the NBA playoffs are out of Turner for the first time because they've always said to us, look, you really impacts the NBA playoffs. Like the regular season at Turner, okay, it's nice to have, but the playoffs were where the money came in. Like you saw NBC's numbers, right? They had some good ad numbers. I think the right model for all these guys is that big tentpole. What NBC's trying to do with Olympics, and they had World Cup on Telemundo, but NBA, I don't know about baseball, but Saturday Night Football. Like you basically need. We talked about this in the past, John, to really eventize sports. 162 games watching the Orioles play. I'm sorry, that's not going to be an event for most people. So I think you really need to be in the event business, John. I really do. I'm not talking about darts either.
Yeah.
You need to have the NFL.
And one aspect to the whole sports ecosystem that I find to be interesting is that, especially when David Levy was at running Turner Sports or Warner Brothers Discovery Sports, the NFL, everybody had this extra bidder that was very aggressive. I mean, they have the championship games in baseball. They had the AL and NLCS, or one of the two. Basketball, they went through the conference finals. They had one of the conference finals. Everybody, the NFL, they always had that one extra bidder that was out there that was dying to get the NFL. Now that they're with Paramount, like all of a sudden these leagues have lost that one extra bidder to bid it up, which explains why they're desperate in terms of trying to bring YouTube on or trying to get Apple to really get more involved, as well as Amazon and Netflix and all those other ones.
Yeah, what's interesting about Amazon and Alphabet? I cover Alphabet. Mike Warren covers Amazon. Alphabet just put up the first negative cash flow quarter, maybe in our lifetime, because of all the capex associated with AI. I think you asked me in the past, like, what's YouTube's strategy when it comes to rights? I just think there's so much pressure at Alphabet to be more disciplined on costs. And because the AI capex is so large and the cost to run data centers is so large, that basically they may be, again, more thoughtful. They're always thoughtful, but maybe a bit more conservative about what they want to pay for at YouTube, because times are a little bit tougher on cash flow, right? And they even issued equity in the last quarter to raise money to pay their capex bill. So I don't really think, and Amazon also has major capex to pay for. So I think one of the things to watch, John, is maybe these, what I would hope would be kind of the guy at the bar showing up last minute with a big check to pay for everyone's drinks. That may not be happening. It may not be happening because of AI and the need for these companies to find cost synergies other places to pay for the massive investment in data centers. So I'm watching that. I know we were surprised that Alphabet, that YouTube didn't keep their NFL right this round. They lost that opening game. Maybe that was just them being a little bit more disciplined because they have to be. I don't know. It surprised me too that they didn't keep it.
I'm increasingly hearing that, especially when it comes to Alphabet/Google. What is their AI capex bill right now?
This year's going to be off over $200 billion.
200 billion.
Right here, I think over 200 billion. And in next year,
and just for the viewers, Michael, that's billion with the B that you're talking about. So
yeah,
what they're going to lose money.
$205 billion. They're not going to lose. They're not going to have enough cash. They have to borrow or issue equity, because they actually had negative free cash flow after they paid for their computers expenses, for their data centers. But John, next year they said significant increase in capex. So this year is 195 to 205 billion. Significant can be almost, we don't know. They haven't given us a guide yet, but call it 250 billion of capex versus like 60, 70 billion 5-6 years ago. So it's a massive ramp up. This week, you'll have Amazon, you'll have Meta, you'll have all the other companies. Apple is the one that has sat out this build. Now they have cash to spend, but again, they have been asking for something that no one wants to deliver, which is we want to buy all the rights, all the markets in perpetuity, or for the time being. I don't think they will get some of these rights the way they want to get them. They'll have to give something up at Apple.
A couple of things on that. One is that in order, and especially with the NFL, that the history has been that if you want to get in on you're going to have to overpay, because the NFL has these established companies that they trust and they know and they like, and all of a sudden, will Alphabet be willing to get in and lose money on video when it has that kind of payout coming for AI? Increasingly, it looks like no.
Yeah, YouTube just grew 13% in the quarter in ads. I mean, they don't need to do this. They have a creator business that's working pretty well. Yeah, so they're more interested in subscriptions now than they are probably in buying rights, selling subscriptions. So we'll watch that. Yeah, they've moved down my list of next bidders up. I'll tell you that much. They really have because of AI.
And then I find Apple to be totally fascinating. They have the money. On the entertainment side, people take them very seriously. They have some of the best, highest quality shows in entertainment. They get some of the biggest stars, and they spend a lot of money on it. They're sort of the HBO of streaming is
Yeah,
how a lot of people view them. With sports, especially coming off this MLS deal, I think a lot of people are waiting and looking at how Formula One does with them because MLS has scared a lot of sports that don't want to go and become invisible,
yeah.
and that's part of the problem that happened with the MLS deal, which now they're trying to get in front of the paywall, and they ended up shortening the length of the deal, and they're trying to get out a little bit earlier. And so
Yeah.
Apple is there's going to be somebody that's going to go all in with Apple again. I just don't know who that's going to be.
Yeah. It's funny because even though they have some great shows, I was going to give everyone a shout out to watch Widow's Bay if you haven't seen it. It's great. But their viewership share of streaming is still like 2%, right? So Apple can afford to lose money, waste money, but they really have never scaled streaming. They never have. And you wonder, like, what are they going to do when they grow up? Because they've no interest in buying other people's assets. They've not bought Warner's when they could have bought Warner's or Paramount. So I don't know what they're going to do, John. Like they're just in there, this tiny little micro share of the market. They were early in Apple TV, so they had these devices and they kind of priced them way too high. Roku took a ton of share. I just don't know what they want to do when they grow up when it comes to streaming. I just don't get it. I really don't. They're not an ads business. They're not a great ad platform, right? So it's kind of weird. It really is.
Do you see any of these
Again,
streamers as being interested in any of these traditional media companies? Like if Fox all of a sudden decides it wants to go up for sale, or NBC is now spun away from Comcast, which presumably makes that potentially up for sale as well.
I think we've seen is Netflix tried to buy Warner's. Look what happened to that stock price. They got clobbered for it. I would think. I would think for IP, not everyone's got IP, right? So Fox has their own IP, more news and sports. But if people want to buy those sports rights, just go buy them from the sports leagues themselves, right? So I don't really think, again, because of the push to move to I don't see Amazon or Alphabet buying. Meta's doing their own AI as well. Apple, why would Apple? They had a chance to buy Warner's. They've never showed up at an auction. Why are they going to do this? So that then leaves you one more. Microsoft is nowhere. Apple. I just don't see it, John. I don't think they have to do this, right? It's like maybe we all fantasize about it because it'd be great for the industry to have a new sugar daddy show up and start buying rights or buying companies. I just don't see it. This AI push is such a big shift from where they were 3 or 4 years ago. All these companies, that is where the next battle is being fought. It's really being fought about, models and data centers and all that, the ability to develop AI. The investment in content's nice in sports, but that's not what we're worrying about on Wall Street right now.
This is totally fascinating to me because it's what I've been hearing. I haven't done anything really on this yet, but
Yeah.
the idea that we're seeing the sports strategies from all these streamers, and Netflix right now, they like big events. The idea of Netflix
Yeah.
coming in and wanting to get like the Sunday afternoon one of the Sunday afternoon NFL telecasts. This
Yeah.
seems
Yeah. The,
like
the AFC
they're not there
package. So
yet.
Jacksonville versus who? Versus
The
Cleveland
Titans,
Browns.
yeah. How are
They're not doing
you going
that.
to
They're not doing
eventize
it.
that, Michael? For goodness sakes, exactly.
Exactly.
The
Exactly. Yeah.
uh,
Yeah. No, John, it's a really good point. I can see Netflix trying to get like the Sunday night game or the Sunday night game because you always have, you know, top two or three. You have a great schedule on Sunday nights, but we'll see what Bella tells us at our conference in October. You know,
Uh, but I think my point is that I'm trying to make is that they're going to be they are going to reach in. They all have their ad tiers. They all like sports. They've all been kicking the tires on sports. But sports just came out of a cable system where you had RSNs. You referenced the Orioles. RSN's doing 162 Orioles games. And they'd
right?
be on as wallpaper in my house of sorts. There's not one streamer that's going to be interested in doing that along the same lines as
Right.
regional sports networks. Perhaps they'll do
Yeah.
the package to where you can stream them here and there, but and it just seems like there's been a really slow moving turn that you reference with regards to the AI spend for not just
Right.
Google, but like all these people have a lot of spends, big spends that are out there, and the sort of panacea that sports saw in a declining linear TV system of, oh well, we'll just
Yeah.
take it and go to streaming. There's now a lot of question marks about whether that's going to happen or not.
Yeah. If I can share some data with you and your audience for the longest time, John, let's call it 2005 to 2019, consumer spending on all things video. Video could be pay TV, film tickets, home video, streaming. But from 2005 to 2019, spending in the US went up by 3% a year. So consumers found 3% every year to spend on video. And part of that 3% growth was basically the continued inflation of the cable bundle. Okay. In 2019, 2020, consumer spending flatlined. Now, the past 5 years, consumer spending on all things video has been flat, right? So the consumers have voted with their wallet. They're not interested in paying 3% a year or more. They're being a lot more diligent and conservative about where they're going to spend their money. They're trading in and out of bundles. They're churning more. They're really thoughtful. So the idea of like everyone's going to go in and pay for sports rights because we'll be able to pass it on the consumer, well, that ended in 2019, 2020. It just has, right? So I think everyone's realized what we can't assume that because we're paying more for rights, we can just pass it on to our consumer. And especially when you go streaming. Streaming is a one-to-one relationship, right? Where I can churn easily every single month. The old cable model, I could have 100 channels that we would watch, we would care about. So churn was much lower. So I just think we're in a different economic period. Consumers are also empowered. There's all this free content, YouTube, Roku channel, TikTok, Instagram Reels. That basically sufficing us. So if that's the correct word. Maybe not suffice. It will suffice. Thank you. So the reality is, you don't need to. I don't know. Is that the right use? You're the writer. I'm just the
Yeah, you
analyst.
know what?
How do I use the
That's
word
why I have my
suffice?
editors. We'll go to
Okay.
the will
Well,
suffice.
suffice
I
it
think
out
is
of
good.
here.
Yes,
It's
yes.
suffice to say, but basically, the reality is that sort of about 5 years ago, consumers have woken up to what they're willing to pay for. I think the owners of these properties have started to become a little bit more thoughtful about what they can pay for, what they can't pay for.
And 5 years ago, that flat line coincided with the rise of TikTok, the rise of YouTube. For goodness
And
sakes,
I'm
YouTube
frozen.
trying to get into the sports rights business, and
You're
they
frozen.
have a lot of free content there as well. Is it all these social media apps that have caused the spend to flatline?
I think it is. I think it's just also streaming came out so inexpensively versus the bundle that this is my whole thing. What we've taken, this is our Michael Nathanson pitch about how these guys cheated the ecosystem, right? So they basically created, when they launched their Peacocks and their Paramount Plus, is such a cheap tier that you say to yourself, why am I paying $100 when I can get three things for $4, $5 each? So we've all become smarter about the cost of what we could bundle ourselves, right? Our own bundles.
Mm.
Plus free.
That's
I
a
mean, entertainment. There's a lot of free entertainment out there. Why do I need 5 streaming services when I can get free stuff like Roku channel?
By the way, Michael and I think one of the reasons that we like each other is that I think we might have been the last two people to say like Fox and ESPN keeping their programming exclusive to the bundle in the bundle, and because that business was so good for them. And you had Peacock, owned by
Yeah.
Comcast, just giving it away, and the NFL games that from CBS going out on Paramount Plus, and like
Oh,
you said, people would be like, "Why am I spending?" $100. I don't know what tier you have, but it's a lot more than
yeah.
$100 to subscribe to Xfinity, and it's you could see this. You could see this happening.
Yeah, I would love to ask Brian Roberts over drinks, like walk me through what you were thinking along the way, right? Like NBC and Comcast had the most incentive to keep the video bundle going. Right? Comcast was the biggest cable distributor, NBC top two, three asset. And just basically it's all unraveled, on strategy. The
So
strategy's not helped things.
you and I have a long history of covering the cable business, and we just got through the earnings season with Charter, with Comcast, and the rate of losses is slowing, but the rate of losses still takes my breath away. I mean, they're losing tens of thousands of subscribers each quarter, even more than that each quarter.
Yeah.
Where where do you stand right now in terms of Charter, Comcast, and the cable bundle? This is a
Right.
newfangled way of asking the question I ask every time you come on, which is, what's the floor? Like,
Oh, that floor. But it's interesting. Charter and Comcast have undertaken two different strategies, right? So, Charter has a strategy where you get all these streaming packages bundled in to your basic essential plus, right? And I think that makes sense, right? So if I'm paying for the bundle, I should get Paramount Plus for free and Fox One for free. I should get that with me. And their cord cutting has really slowed. This quarter wasn't awesome, but they pretty much almost got back to zero in terms of cord cutting change at Charter. Like -10 to 0 is pretty amazing. Comcast has not followed that strategy, and I don't know why they've not followed that strategy to basically create a super bundle of these apps into one. Their decline rate's pretty high. But what's going to be interesting is Comcast is going to become two companies, and you wonder when Comcast becomes a cable only company and NBC is a content only company, will strategies at Comcast look more like Charter? Can they wake up and say, okay, let's stop the video bleeding. Let's start making better bundles. Let's make smaller bundles. Like we've been waiting, John, as far as you and I talk to each other, just lighter and lighter bundles, right? I want a sports and news bundle. YouTube's offering that. It's still too high. It's like $70 versus the 85 bundle for the whole YouTube TV. But I have to believe that when Comcast is on its own, they'll probably look more like Charter. I wonder what Craig will say because he covers Comcast. But Charter has done a better job of holding on to video subs recently than Comcast, right? Now, Craig would
if I'm
poo-poo the
going to
idea
make
of they're all going to merge anyway, but he says they're not going to merge. But I think at some point in a new administration, you got to merge all these guys into one. There's not a lot of synergy, but you need one cable company, basically, nationally.
if I'm going to make a bear case about Charter that I've heard, it's like, yeah, they've slowed the rate of decline better than the other
Yeah.
MVPDs, multi-channel video providers, but their revenue is really lagging. Because so in your mind, this strategy that they have to make these big bundles that include all of the streamers, it still does work even if the revenue lags its brethren.
Well, the stock price tells you it's not working, right? If you want to depress the Moffat Nathanson folks, just put up the stock chart of Charter the past 5 years. It's been a debacle. So your argument would be, Michael, yeah, the video sales are small, but the stock market doesn't care. In fact, if anything, both Charter and Comcast are in free fall and been for the past couple of years. And there's nothing you can do about it, right? Like just their prices are too high relative to alternatives, right? It's just the big video bundle. I have YouTube TV. I'm a big fan of it. I don't know why everyone doesn't have YouTube TV. I don't need set-top boxes. I can travel with it wherever I want. I could spend a week somewhere and have YouTube TV with me. You have cloud DVRs. I don't have a lot of excess channels, John. I like to me the problem is competition from streaming, competition from other data providers. It's classic. When there's overbuilding in a sector, you don't want to own the sector. That's the takeaway.
Yeah, the one thing I'm a devotee of YouTube TV. Like, I turn it on. It knows I like Maryland. I click on Maryland. I don't know if the game is on Peacock, NBC,
Yeah,
CBS, Fox, FS1. It doesn't matter to me, and I just kind of click on, and then it takes me right to it. But
I
I
agree.
do want to dive into something that you said. Uh, was that a prediction that you think Charter and Comcast and all these other cable operators are going to get together, or is that something
Well,
that you
that's the
think that they
hope.
really
Yeah,
do need to
no,
consider?
well, Craig would tell you, terrible idea, never going to happen. He's a cable guy, but I think there's a hope. At some point, things continue to get so bad that they snack them together. It will not be this administration. I think this administration doesn't like the folks in Philadelphia very much, but we'll see, right? If SpaceX becomes, which we have doubts about, this big telecom competitor, you have a new entrant, SpaceX. You have the phone guys in the business of selling data. So can cable just say, look, competition is now all around us. We need to combine. Craig will say it's not going to happen, not going to happen. But I think there's a hope out there that maybe that will stop the bleeding at some point of these stocks. Again, if this was
Wait,
CNBC, you'd show the stock prices and you'd say, "Oh yeah, these have to combine because look how bad the market thinks they're gonna be in the next 5 years." Yeah.
I'm a little bit confused. Why did you bring up SpaceX for the broadband
Yeah,
potential
SpaceX is in the
reasons,
broadband
or
business. Yeah, they're in broadband. They also want to create
is
a
there anything
telecom
beyond
competitor.
broadband that they would be in this business for? Like,
But
could you
well,
eventually get a
they
YouTube
want.
like?
Well, yeah. I mean, they SpaceX owns X, right? So they have X in there, and the long term hope is that the X app becomes an all in one app where you do everything. It hasn't turned out that way yet, but Elon Musk's vision is like X becomes like one of the Chinese internet apps where basically you do your banking there, you watch a video there. It's all in one place, right? But for SpaceX, the idea is both data and telecom that they're going to become more competitive in data and telecom.
Let's switch topics a little bit, and I want to get into Netflix because Netflix.
Yes.
I love reporting on these guys because they've gotten in very slowly. I quote you all the time. Watch what they do, don't listen to what they say. Because
I'm
right
sure
now
they
they
love
just
that.
want
Yeah.
big events.
Yeah.
And they have next year's women's World Cup, which is, that's certainly a big event. But boy, it's a lot of big events. That didn't seem to I was so surprised when they got that because it didn't seem to fit within their eventized strategy. What
Yeah.
Netflix and sports? Give me like how you see their strategy and how you expect it to develop.
It's funny. We just did Robert and Justin in our office just did a note about Netflix time spent looking at the first half data. Live sports is such a small piece of how people spend their time on Netflix, right? The pitch for live sports, really, I would say premium sports, is the advertising opportunity, right? Like, I would think you need an NFL or NBA package to walk in to the doors of agencies and say, look, we want all your brand dollars, right? Like, you basically differentiate your offering by getting a premium sport. Um, they don't. They would argue that they don't need live sports for subscription. Like they're doing well, the revenues are growing well enough without having live sport. My pitch would be you need blockbuster sport to get the ad business up and running. It's 3 billion or so of ad revenues this year, which just isn't that big, John, at the end of the day. But you get an NFL, and for 22, 23 weeks, you'll have the biggest brands, the highest CPMs, the biggest audiences, and then maybe you create a flywheel off of that. So even though they said, well, they haven't said at this point lately, no NFL. They have 5 games coming. So I would think of all the bidders we talked about earlier, they're probably most likely plus one for like a super, super package, like a premium package of NFL games. So I'm the NFL, I think about how I rejigger my rights to create something that's eventizable over, 10 or 15 weeks or so. Like give me something that's so big people have to watch these games, right? That's what I would try to do if I'm the NFL and
So
Netflix for the advertising opportunity.
look, the NFL, the biggest sport that's out there, it gets the most eyeballs. It's the biggest entertainment vehicle in the U.S. right now. What's another blockbuster sport that you can see Netflix reaching out to sort of help in terms of advertising?
We just had a World Cup. Is that likely to get, we had a Women's World Cup, an Olympic in the right time zone? Like I think we're thinking about having an Olympic panel at our sports day in October. The way that NBC's produced these Olympics is they've done a really good job. So maybe they do Olympics where they can own 2 or 3 weeks in a month. That'd be awesome, right? Where it's all available, all at once. So very few things rise up to that level of, stop what we're doing. Like World Cup did, John. Like I basically was on a Zoom when it was England and Argentina and said to the person on Zoom, a client, I'm like, look, I have to go. Because I watch England and Argentina. There are very few things where like you're so rude to someone, you say, I got to stop talking to you to watch a Zoom, watch a sporting event. So it's got to rise to that level. I would say World Cup now, Olympics, NFL. March Madness, maybe. March Madness is, but that's more, doesn't have the same global appeal to it.
So at the
end
of
so,
my,
I mean, you tell me what besides the NFL do you think they put would be number 2 on a list like this? Do you agree? World Cup,
football,
Olympics,
maybe.
or no? College football.
The problem with the World Cup, it's every 4 years. It's hard to sort of validate, build something around the World Cup, and the same. Well, I guess the Olympics is every 2 years, but it's the same premise here. But I have a quick question for you. At the end, this is at the end of this pod too, but at the end of my most recent pod, I had Marchand on, and we talked about, okay, who is going to get the next World Cup? And I threw out based on no reporting, but I was like, I think that Netflix is going to partner with Fox and they'll just share it. So they'll get some broadcast and keep DC happy. And then is Netflix set up for that? Are they the type of company that could partner with an established broadcaster to do something along those lines?
But let me ask you this: why would Fox not just put it on Fox One? Like, why wouldn't Fox say we have Roku
because the price is going to get too high.
Price is so high.
Yeah, hey, instead of bidding against each other, let's go in together.
I've not really seen Netflix partner. I'm trying to think before I make a definitive statement about partnerships, but they're kind of not the partnership type. Like most tech companies are not really into partnerships. They're not. Yeah. I don't.
Well, if it happens, I'm going to be crowing about it forever. If it doesn't happen,
Fox and
nobody's
Netflix,
going to remember it. Michael, always awesome to have you on. Thank you so much, and we'll see you soon.
Hey, John, thanks for having me, and have a good couple of weeks. I'll see you soon. Be good.
Okay, thanks to Michael Nathanson for joining this week. Thank you for listening to The Varsity, an Odyssey podcast in partnership with Puck. I want to acknowledge the executive editors from Puck. That's Gabi Grossman, Ben Landy, John Kelly, the great Bob Tabador from Odyssey, and our partners at Nesson, Greg Poth and Matt Colpitz. If you like this podcast, sign up for my newsletter. It's also called The Varsity. Go to puck.news, use the code word The Varsity, all one word, for a 20% discount, and I will see you on Sunday.